Let's get ready to mortgage. He is the prince of programs, guru of guidelines, master of matrices. He puts the fun in funding. Please welcome Mark, Mr. Mark-eitel.
All right, my name is Mark-eitel, and you are listening to the Mr. Mortgage Show. And guys, we do this each week right here, same time, same station. Super excited to be with you this week. Man, we've got an amazing show lined up for you. There was a ton of housing data released this week. All things you need to know if you're thinking about buying or selling or refining. We're going to cover all of the data. We're going to dive into your questions, but settle in. You are in the right place if you want the data, not the headlines, not the talking heads on the news, but the data, the real stuff. We dig deep to give you the data, the tips, the tricks, the strategies, and all the information that you need so you can go out there and make better real estate and mortgage decisions for you and your family. And guys, you know, if you've been following the real estate market for any amount of time, how expensive a bad decision in real estate can be, whether it's the wrong mortgage program or the wrong strategy to buy a house. Man, it can cost you tens of thousands, if not more, over the course of owning a piece of property. So we're super excited to be with you. I say we because I'm joined, as always, by my lovely producer, Jennifer, who is womaning the Anytime Hotline. She'll get your questions on the air. If you've got questions or comments, this is an interactive show, so call or text. Guys, you can always text your questions. If you are shy and it's easier for you to do it that way, you'd be surprised. The vast majority of people shoot us a text. And the number to shoot us a text is 855-462-7292. That is the Anytime Hotline, 855-462-7292. One more time for the kids in the back of the bus. That was me, 855-462-7292. If you prefer to shoot us an email, just visit mrmortgageradio.com. That's mrmortgageradio.com. Scroll to the bottom of the page. There you'll find an email icon. If you click on that, you can shoot Jen your questions that way. Hey, but speaking of Jen, I want to check in with Jen. She is always smiling, always making the studio a little brighter, a little happier place to be. Hey, Jen, how are you? How was your week?
I had a great week, Mark. Thanks for asking. How was your week?
Yes, thank you for asking. My week was great, too. I'm super excited to be with you. I'm glad you had an amazing week. But you know what? This is always my favorite hour of the week. I love doing the show. I love answering the folks' questions. And I really enjoy spending the hour with you. So super excited to be here this week. As I mentioned in the opening, there was a lot of housing news this week, and I wrote it all down. I've got a camera on in the studio, so I'm splitting my attention between the camera and the microphone. So I'm holding up the piece of paper with the list of all of the news from this week that I wrote down. And normally I'll have printed out all of these articles and go through all of this, but I just wrote down some bullet points so we can kick this thing off and get rolling. So it was super interesting. There was a lot of activity this month around housing, starting with the Federal Reserve raising interest rates a quarter point. And we covered all of that over the course of the last 2 weeks on the air with you. But it was interesting because if you recall, the press conference afterwards, the languaging was a little more favorable than the market had anticipated, and rates pulled back. And that's when that crazy headline, I call it the great rate head fake, the headline said rates dip back into the fives. I posted it to the Facebook page, and you can find that by visiting mrmortgageradio.com. And I warned everybody, guys, this is a head fake. It's not going to stick. Well, guess what happened? The very next day, and I didn't think it was going to be the next day, but the next day the jobs report came out and blew by almost triple everybody's expectations, which indicate the economy is still super strong, which is what's fueling inflation, which is what's fueling rate hikes, which in theory is ultimately going to cool the housing market, right? So the jobs report came out, and what happened? Rates went right back where they were in the mid-sixes. And then the CPI numbers came out, and I did a short Tuesday evening talking about that. Man, it came in, what did I say? Drop it like it's hot. That number came out hotter than anticipated. And because of that, another indicator that inflation is not yet under control and more rate hikes are going to be required, and the market reacted accordingly and rates moved back up. So they're really getting this solid footing in the mid-sixes. Well, guess what happened next? Wednesday morning, the retail sales numbers for January were released higher than anticipated. More indication that the consumer is still spending. So think about this for a minute. We've gone through a ridiculous series of rate hikes, hike after hike after hike, trying to cool the economy. The Fed has said on more than one occasion that layoffs are likely. We started to see layoffs in the tech sector. We're still seeing that. Then the jobs report came out. Clearly, this is not being fueled by tech jobs, but nonetheless, a ridiculously robust jobs report. The economy is not yet cooling. We're not seeing a downturn in the number of people employed in this country, so people still have money. Then we see that inflation came in hotter than anticipated, and retail sales came in hotter than anticipated. If you boil all of that in a cauldron of what the heck does all this mean, Mark? Inflation is here. Inflation is fighting the Fed back. It's a 1-2 punch, counter punch. This is a battle. This is Tyson Holyfield, the Fed versus inflation, and nobody's bitten an ear yet. There's no clear indication what's going to happen. Because of all of that, it's highly likely that rate hikes are going to increase, and the market has adjusted accordingly. Now, I say all of that just to inform you, not to scare you, not to discourage you, because here's the other side of the equation. There is still far more demand than supply in the market. It was interesting. There were reports this week released on CNBC, new headlines. I've talked to agents all over the country. There is robust activity on open houses again. And I saw an interesting headline the other day that said, don't get too excited. This isn't a buyer's surge. It's just a seasonal adjustment. Well, that's true, guys. Real estate always slows down in the winter months towards the end of the year because snow's on the ground in most of the country. Kids are coming home for the holidays. It's not an ideal time to move house. It's not an ideal time to uproot the kids into a new school district. It's not an ideal time to show property. So statistically, in November and December, real estate slows down, and then entering the spring months, real estate activity increases. Whether we're in an up market or down market, that's a historical movement based on seasonality. So if this headline is to be taken seriously, that, this is just a seasonal bump, it's all doom and gloom, well, then the downturn was just a seasonal downturn. So my point is that the headlines are often written in a way that are just to grab your attention and to get your eyeballs on that, whatever that news outlet is, so they can sell advertising. And it's clear that it's over dramatized. We saw that big headline, rates dip into the fives. Guys, they were 5.99. That's barely into the fives. Not worthy of a headline, rates dip into the fives. In my book, that's 6. I mean, statistically, that's a 6% interest rate, but the headlines, rates fall to 6, that's not sexy. Rates dip into the fives, whoa, that's got my attention, and it had everybody's attention. But we talked about it during the episode called the Great Rate Head Fake, that it was short-lived, and guys, it only lasted for about 7 hours. So if you missed that episode, check it out at MrMortgageRadio.com. That's MrMortgageRadio.com. But you can tell I'm animated. I've had my coffee. We are ready to rock and roll. We've got an awesome show lined up for you. Sit tight. You hear the music. You know what that means. That's my cue. We'll be back in a few. Sit tight. On the other side of this break, we'll be back with more of the show, and we are going to dive into your questions.
Hey, it's Mark-eitel, host of the Mr. Mortgage Show, and I'm going to interrupt this commercial break to ask you for a favor. If you have any friends or family or coworkers who are thinking of buying or selling or refinancing real estate, I'm hoping I can count on you to introduce them to me, to the team, to the show. We'd love to help them any way we can. Just simply share the link, MrMortgageRadio.com, MrMortgageRadio.com. Again, it's Mark-eitel, NMLS 1929005. Now, back to the commercials.
Paradise is closer than you think. West Building Contractors can help you create your perfect piece of paradise. They have mastered the art of pavers, hardscapes, summer kitchens, pools, and more. For a free design consultation and quote, visit westbuildingcontractors.com or call 772-284-6994. West Building Contractors offer new construction, luxury additions, and remodels too. That's 772-284-6994 or westbuildingcontractors.com.
Hey, it's mark-eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Here's another 5-star review.
We started our loan with a different company. They said we were approved, but at the last minute they told us there was a problem. I still don't know what went wrong, but thankfully our real estate agent told us about Mark. I was pretty stressed, but it's the perfect house, so we gave Mark a shot. He got it done. I'm not sure what was different, but I don't really care. We even got a better interest rate and with less money out of pocket than the first guy quoted us. It was a great surprise. Yes, I'm happy to recommend Mark and his Mr. Mortgage team.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is mark-eitel, and you are locked and loaded, tuned into the Mr. Mortgage Show. And friends, thank you so much for choosing to spend a little bit of your day with us. We are truly honored and enjoy your company. So I say we because Jen is with me, my producer. She is womanning the Anytime hotline. That number is 855-462-7292. That's 855-462-7292, and she'll get your questions on the air. You can call or text that number. One more time, it's 855-462-7292. If you prefer to shoot your question via email, just visit mrmortgageradio.com. That's mrmortgageradio.com. Click on the email icon, which you'll find on the bottom of the page, and there you can shoot your questions over to Jen. That's mrmortgageradio.com. Hey, and she just reminded me during the break that we have added some stations this week. So if you are hearing us for the first time, welcome, friends. This is an interactive show. We encourage your comments. We encourage your questions. You know how to reach us with those phone numbers or those emails. But hey, I'm going to ask you a favor. If you're hearing us, actually, you know what? This goes for everybody because we've recently added some new stations. And I think next week I'll be better prepared and give everybody a proper thank you. But if you'll do me a favor and text us where you're listening from, I would love that. I'd love to know the impact that we're having as we continue to broaden the reach of the show. Shoot us a text to 855-462-7292 so we can give you a proper shout out, if you will, and thank you for being a listener. That's 855-462-7292. That would be awesome. But anyway, I always enjoy your questions. They are my favorite part of the show. If I forgot to introduce myself, my name is mark-eitel. This is the Mr. Mortgage Show, and we do it each week right here, same time, same station. So let's dive right into the questions. That is my favorite part of the show, and Jen mentioned during the break that we had a few queued up. So let me throw it over to Jen for the first question of the show.
Bart is asking this question. My credit score is now 642. Are there any first-time buyer programs that might work for me?
Hey, Bart, that's a great question, my man, and congratulations if you're on the upswing and you hit 642 with your credit score. The good news is there are a variety of programs available with that credit score. And if you're out there and your score is not a 642, I would encourage you to explore your options anyway, because there are some programs with no credit score requirement and many programs that will approve a manually underwritten loan in the 500s. So, yeah, Bart, that's a great question, my man. And to answer your question, you have options. So if you have a down payment, your credit certainly meets the threshold. You've got adequate income. You could even go with conventional financing. There are FHA programs with down payment assistance. There are conventional programs with down payment assistance if the down payment is the challenge, or the cash to close, if you will. There are several strategies to get you into a home as a first-time buyer or not with that credit score. So congrats. You definitely have choices, and I welcome the opportunity to walk you through those. If you'd like to have a further discussion, give me a shout, 855-462-7292, and we'll schedule a call off the air, and I'll walk you through it. But as I mentioned, there's a variety of loan programs available. So I like to think of a loan application like a stool. And this, if you're hearing me for the first time, guys, I'm an old Florida hillbilly. And I know we don't have many hills in Florida, but I was raised by a very simple gentleman. My grandfather was a farmer and became a builder. So he always instilled in me these visual references. So a stool is how I think of a mortgage application. And we all know that a four-legged stool is solid. I mean, that's the stool you stand on to change the light bulb. That's a rock solid stool. But a three-legged stool, more rickety, but will also stand. I don't know that you want to jump up on it, but it'll certainly bear your weight. That's how I look at a mortgage application. There are four legs, right? The property, your income, your assets, and your credit score. And a three-legged stool will stand. And what I mean by that is if you've got a load of income and a load of assets, but your credit score is a little shaky, well, you've got three of the four legs. There is a good chance that you can get your loan approved. If you're self-employed and you don't show a lot of income on your tax returns, but you've got the assets and the credit score, there's an app for that. There's a loan program for that. So I like to think of that stool analogy because I think it's encouraging to know that three of the four requirements can often get it done. And credit score alone is usually not the challenge. Sometimes a low credit score is pulled down for things like if you've defaulted on federal debt, like a student loan, or you've got judgments from the IRS, well, then you're not going to get an FHA loan because that's a federally insured loan. You already have defaulted on federal debt. So sometimes with the lower credit scores, it's not necessarily the score, it's the cause of the score that may be an issue. But I encourage everybody, and I think the last 2 years have demonstrated the power of buying real estate. We all know those people who had rented and jumped in the market and now suddenly have tens of thousands, if not more, in equity. So, Bart, I appreciate the question. I hope that helps. You've got choices, brother. With that score, do not slow down. Take the next step, and I would welcome the opportunity to help you. And let me throw that out there, guys. This is way more than a radio show. It's way more than a community. There's the Facebook group. There's a lot of things we do, but we also are a practicing mortgage brokerage. So if you're hearing my voice, we could help you in your market. It's that simple. So 855-462-7292 if you want to take the next step. And even if the next step is just a conversation to work through what Bart just asked. You know, my credit score is this. Is there any hope? I would love to talk you through it. And you're always welcome to shoot Jen your questions here too, live on the air, and we will dive right in. But hey, let's throw it over to Jen and see if we can't squeeze in another question.
Pete wants to know, I called your office and talked with Tanya about the landlord loan. I think she said the first 5 years are interest only. Is that correct?
Hey, Pete, thanks for that, brother. Yeah, the landlord loan is an amazing loan program, guys, if you're hearing this for the first time, to utilize to buy investment property. So we look at your assets and we look at your credit. We don't look at your income. We look at the income being generated by the property. If the property cash flows, boom, you're a landlord. So, but to answer your question, Pete, the landlord loan has an option to be interest only for the first 10 years. Not 5, but a full 10 years interest only, and then it becomes a 30-year fully amortized loan. And what's cool about that, if you're an investor, cash flow is king. We see it all the time, all over the internet, cash flow, cash flow, cash flow. By servicing that debt interest only, you're able to maximize your cash flow. And who knows, you might sell the property in the first 10 years and 1031 exchange the gains and flip it into more properties. And if you want to talk about the BRRRR strategy, which is buy, rehab, rent, refinance, and repeat, coupled with a landlord loan, man, that's a dangerous combination that can help you go out there and acquire a serious portfolio of property. So brilliant question, but the landlord loan allows for a 10-year interest-only period so you can maximize cash flow. And guys, the other way to make money in real estate is the gain, right? You buy it and you sell it for more later. That's less sexy, but investors like cash flow, and that interest-only period can help you maximize it. But hey, guys, you hear the music. You know what that means? That is my cue. We'll be back in a few. Sit tight during this short commercial break, and on the other side of the break, we'll be back with more of the Mr. Mortgage Show.
Hey, it's Mark-eitel, host of the Mr. Mortgage Show, and I'm going to interrupt this commercial break to ask you for a favor. If you have any friends or family or coworkers who are thinking of buying or selling or refinancing real estate, I'm hoping I can count on you to introduce them to me, to the team, to the show. We'd love to help them any way we can. Just simply share the link, MrMortgageRadio.com, MrMortgageRadio.com. Again, it's Mark-eitel, NMLS 1929005. Now, back to the commercials.
Paradise is closer than you think. West Building Contractors can help you create your perfect piece of paradise. They have mastered the art of pavers, hardscapes, summer kitchens, pools, and more. For a free design consultation and quote, visit westbuildingcontractors.com or call 772-284-6994. West Building Contractors offer new construction, luxury additions and remodels too. That's 772-284-6994 or westbuildingcontractors.com.
Hey, it's mark-eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com, www.reallyGreatAgents.com.
Here's another 5-star review.
We kept our business above water with credit cards during the pandemic. I'm glad we did. Business is better than ever. But I didn't want to be a slave to those credit card payments. I called Mark about the REC loan he advertises. Long story short, we did a REC refinance and paid off everything, even the car. Now we only have the mortgage payment. We're saving a bunch every month. Yes, we are happy to recommend Mark and the Mr. Mortgage team.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark-eitel, and you are tuned in to the Mr. Mortgage Show. And friends, we do this each week right here, same time, same station. I am joined, as always, by Jen, my producer extraordinaire, who is womanning the Anytime Hotline. That number is 855-462-7292. That's 855-462-7292. And guys, do me a giant favor if you've got a second. Text me where you are listening to us from and the station. That would be awesome. I'd love to give everybody a shout out and a proper thank you. And that number one more time is 855-462-7292. Or you can shoot us an email. Just visit MrMortgageRadio.com. That's MrMortgageRadio.com. Scroll to the bottom of the page. There you'll find the email icon. Click on that and you can shoot your questions or comments. You can even email us where you're listening from. That would be awesome. But yeah, we're going to continue with your questions. I'm going to throw it over to Jen. We had a couple good questions last segment. We talked about a credit score of 642 and what options were available from my man Bart. And then we talked about the landlord loan. And guys, that is a powerful, powerful tool. And, you know, right now, I think the latest statistic I read showed that rents increased annually. Actually, you know what? It was in the CPI numbers that were released this week, and I published it to the Facebook page. So go to MrMortgageRadio.com, scroll to the Facebook page link, click on that, and you'll see that rental costs of primary residence increased, I think it was 8.1, 8.5%, something like that, over 8%. So as rents keep increasing and property prices seem to have stabilized a little bit, still appreciating, but at a slower pace, landlords are starting to really like that combination, if you will, right? So it's interesting because rental increases still seem to remain strong. I mean, 8% year over year is a pretty hefty hike. So it may make sense to be a landlord. And if it does, that landlord loan that we just talked about in the last segment might be the way to do it. So anyway, let's throw it over to Jen and keep your questions coming. What do we have, Jen?
Anonymous sent this one. Can I use my VA entitlement to buy a house with my girlfriend?
Hey, you mean anonymous because they didn't sign? Okay, yeah, not anonymous because you have a wife, but you're trying to buy it with your girlfriend. So yes, you can. Now, here's how that works. The VA entitlement is for the veteran and the veteran's spouse. So you're not going to get 100% financing, but you can certainly buy together. You can use your girlfriend's income. You can use her credit, your income, your credit. but it is going to require a down payment. But to answer your question, you can absolutely buy as a veteran with a non-veteran, non-spouse. It's just going to require a down payment. So I hope that helps. If you want to dive into that deeper, just give me a call or shoot me a text, and I'll be happy to dive deeper with you on that off the air. And if you are hiding something from your wife, maybe off the air is the place to have the conversation. But I'm saying that in jest. I'm sure that's not the case. So anyway, thanks for that, and I hope that helps. Hey, Jen, do we have another question?
Amanda has a question. I tuned in late last week and heard you talking about a minimum distance we'd have to move if we want to keep our current house as a rental when we move. Can you explain that again? Thanks.
Hey, Amanda, thank you for that question, and thanks for being a listener. So last week we talked about an FHA loan. That was the spirit of the conversation. So if you were keeping your current home and it had an FHA loan on it, and you were wanting to buy another property with another FHA loan, there's a requirement of distance in between those two properties, because FHA is designed to assist people in buying their primary residence. They don't want the house hackers, if you will, to buy a property with an FHA loan and then go across the street and keep doing that. It defeats the purpose of providing access to capital for a primary residence. So if your job transfer or you're leaving the area, they allow you to keep that property, keep it as a rental, and go buy with another FHA loan. And that's where that distance gap is required. It's called the departing residence distance rule. And you can Google that or just give us a call. I'll shoot you over a copy of the guideline text to better explain that. If you're not going from FHA to FHA, then it's not a circumstance that's going to apply. So you mentioned you jumped in late last week, and that's what I was talking about. Keeping your current home that has an FHA loan, yet buying another property with another FHA loan, and that's where that distance requirement comes in. So I hope that clarifies that. I greatly appreciate you doubling back and shooting us that question this week, and thank you so much for being a listener. So that was awesome. And if you need more information, just give us a call or shoot us a text or email. I'll be happy to dive deep with you on that. So, hey, Jen, throw me another one.
Connie sent us this. We'd like to help my mother-in-law buy a condo close to us. Is it better to buy it as an investment and rent it to her, or buy it with her as a co-signer? We're trying to avoid any complications when she dies. Hope this makes sense.
Wow. Okay, Connie, that's a great question. I'm going to need to know a little bit more information, but I'm going to paint with a very broad brush here and talk just generalities. There's a way to accomplish it either way. So you could buy it all together, right? I think you said mother-in-law? Okay. So the three of you could buy it together, and you and your husband could be non-occupying co-borrowers. And that way, all of your income, all of your credit is utilized for her to purchase the property. And then there's a benefit to going that route because she could file homestead exemption on the property and have all of the benefits of a homesteaded property. If you took title as joint tenants with right of survivorship, then when one person dies, the other two become the owner. If two people die, the one person becomes the sole owner. That might accomplish your goal and put the property in her name from the beginning and allow her to file for homestead exemption. That might be one way to do it. So to recap, you are trying to avoid a complicated transfer of ownership when she dies. If you buy it together with the joint tenants with right of survivorship, then if she dies, you end up with the property. That's one way to do it. The strategy that you're talking about, or your first idea of buying it as an investment property and renting it to her, it's always titled in your name, so there's not an issue when she passes. However, she's not going to benefit from the homestead exemption, so you're going to pay more property tax, and the investment loan typically has a slightly higher interest rate and requires a slightly larger down payment. So those are things to consider. If you use the investment strategy, it's already titled in your name. You can rent it to her. When she passes, it's already your property. It's a non-issue. However, you're going to have to put down a larger down payment, and then as an investment property, it carries a slightly higher interest rate. The other strategy would be, as we talked about, with the joint tenants with right of survivorship. But all of that being said, I'm not a tax attorney. I'm not a real estate attorney. This is just what I've seen done in the past in circumstances like this. So I would certainly advise you to seek counsel. But if I'm reading between the lines, I think either one of those two strategies would work. And if you need more information, please do not hesitate to reach out. I'm always here and happy to help. That's why we do the show. But Connie, thanks for that question. That was a great one. You got me thinking. You stretched the gray matter a little bit, and that was awesome. So, guys, you hear the music. You know what that means. That is my cue. We'll be back in a few. Sit tight on the other side of this break. We're going to dive into more of your questions and more of the data. We'll be right back with more of the Mr. Mortgage Show.
Hey, it's mark-eitel, host of the Mr. Mortgage Show, and I'm going to interrupt this commercial break to ask you for a favor. If you have any friends or family or coworkers who are thinking of buying or selling or refinancing real estate, I'm hoping I can count on you to introduce them to me, to the team, to the show. We'd love to help them any way we can. Just simply share the link, MrMortgageRadio.com, MrMortgageRadio.com. Again, it's mark-eitel, NMLS 1929005. Now, back to the commercials.
Paradise is closer than you think. West Building Contractors can help you create your perfect piece of paradise. They have mastered the art of pavers, hardscapes, summer kitchens, pools, and more. For a free design consultation and quote, visit westbuildingcontractors.com or call 772-284-6994. West Building Contractors offer new construction, luxury additions, and remodels too. That's 772-284-6994 or westbuildingcontractors.com.
Hey, it's mark-eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com, www.reallyGreatAgents.com.
Here's another 5-star review.
As a realtor, I have a bunch of mortgage brokers to choose from, but I prefer to work with Mark and his Mr. Mortgage team. In this crazy market, there is no room for error, especially on the mortgage side. Mark's team moves fast, keeps everybody in the loop, and makes things happen. They always give my clients a great deal and take the time to walk them through every step of the process. When you're considering a lender, I encourage you to talk to mark-eitel and the Mr. Mortgage team.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is mark-eitel, and you are listening to the Mr. Mortgage Show. And friends, thank you so much for choosing to spend a little bit of your day with us. We are truly honored and blessed that you're with us. So I say we because I am joined, as always, by Jen, my producer. She is standing by, womanning the Anytime hotline, and she'll get your questions on the air. You can call her or text her at 855-462-7292. That's 855-462-7292. That is the Anytime hotline. And guys, when we're not on the air, that pushes to my office. So we're still available to you, 855-462-7292. Or if you prefer to shoot us an email, just visit MrMortgageRadio.com. That's MrMortgageRadio.com. Scroll to the bottom of the page and click on the email icon, and you can shoot us your questions or comments that way too. And while we're talking about the Anytime hotline and during the week, and we can help you too, guys, this is so much more than just a radio show. We are a mortgage brokerage. The team is everywhere but New York. So if you need us, call us, text us, send us a not a stool pigeon. Is that what it's called? The pigeon. Tape your message to the leg of a pigeon and send it our way. If we get it, we'll be happy to help jump in, answer any questions. We're always here if you need us. But hey, you know your questions are my favorite part of the show. So let me throw it over to Jen and get another question on the air. Hey, Jen, what do we have?
Robert is asking, I've owned my business in Nebraska for 15 years. I'd like to move to Florida as my full-time home, but I'm keeping my business in Nebraska. I've been told I have to use an investment property loan. I'd rather not do that. Are there any other options? Thank you for your show.
Hey, thank you for your question, brother. I followed that. So you're a business owner in Nebraska and you're going to move to Florida. And yes, you can do this. You can do it as a primary residence, but there's some caveats, right? Are you able to run the business from Florida? So I don't know anything about your business, but I'll share a couple stories with you. So during the pandemic, we saw a ton of people relocating to Florida, South Carolina, North Carolina, Texas, and a lot of them were political refugees, if you will, because some of the southern states were more open, if you will, during COVID. So not a political statement, just sharing what I saw during the pandemic. So we've had a few instances where one gentleman owned a big manufacturing company. I want to say it was New Hampshire, but I might be wrong. It was in the Northeast. And he was buying a condo in Florida, and that was going to become their primary residence. So we were able to demonstrate that he already essentially ran the business from afar, if you will. He wasn't a 40-hour-a-week 9-to-5er. He had all of the staff in place to run the business. Now, that's a very hands-on business. That's why I'm sharing that. He was running a manufacturing facility where people unlocked the door every day and went into this facility and produced work. They were there 40 hours a week. And when he started the company, he was the guy turning the key. He built it up to the point that he was no longer that guy turning the key. He was not required to be on site to run the business. We demonstrated that. Boom. Primary residence in Florida. So if you can demonstrate that, you're home free. Here's another scenario. We had a couple that were high-end interior designers, and I mean, super famous in their space, right? HGTV, all kinds of cool stuff. They loaded up their RV, and when I say RV, they had a big Prevost, big $1 million bus, and they were, touring all over the country, but they're interior designers. So they handle jobs, if you will, all over the world. So they flew out of LAX to their clients. They viewed the property, whatever they did on site, then they flew back to their studio, did all the design work. My point is, that job was more of a service-based business, and they were already flying to their clients, and they had done that from the inception of the business. So they demonstrated that, and it didn't hurt that they drove around the country for a year during the pandemic and their sales grew, which was mind-blowing to them and to me that they were able to grow their business from the road. So that was an easy one to demonstrate that they weren't necessarily required to be at their showroom facility in LA. They were able to run that business from anywhere. So I shared those two stories because they're very, very different businesses that both individuals were able to demonstrate that they can run them from afar. And because of that, they qualified to use the primary residence loan, which requires a smaller down payment, lower, all of the benefits of buying that home as their primary residence were afforded to them because they could run their business from anywhere. So I know that was a little bit of a long-winded answer, but I wanted to share a couple of different versions of how that could work. So I hope you found that helpful. If you need more information, please don't hesitate to reach out to us. We are always, always happy to help. We'll jump in and answer any questions we can. And if we can help you with your mortgage needs, we can do that too. So I appreciate you, brother. Best of luck, and we're here if you need us. Hey, Jen, that was a good one. Do we have another? Okay, what do we have?
Lisa sent this one. My lease is up again in April. I was ready to buy my own place last year, but everyone kept telling me the crash is coming. Well, prices and rates are higher, so I'm very confused. Any advice for a first-time buyer?
Wow, Lisa, man, oh man, oh man. I wish we would have talked a year ago. First, let me say my heart breaks for you because obviously last year would have been a better time to jump in and buy that first property. I would encourage you to shut out the noise, right? Because you were clearly influenced last year and you held off, and now a year later, you're paying a higher price. And more importantly, the money is costing you more. So that really dramatically impacts that monthly payment. So I would look at my budget. I wouldn't look at the headlines. That's why we do the show, guys. We say it every week. We go past the headlines to the data so we can do exactly what we're doing here. Give you the info you need so you can make better decisions for yourself. I would encourage you to look at your budget. I would start by what you're paying now for rent. And I would see what the comparable property you could buy for that rent payment is, because you've already established that you're able to make that payment, especially if you're considering renewing that lease again. And if there's an increase in that lease, I mean, we won't even go into that. That's another benefit of owning your property is with a fixed mortgage, other than, the slight increases in taxes and insurance from time to time, that payment stays pretty close to what it is for every year over year, where we see landlords jacking rents every year upon renewal. So you're controlling your destiny by buying that property, not to mention the benefits of ownership from the tax write-offs and the equity that you're going to build over time. And I get it. It's hard to look what happened last year and say, my God, I missed out on that big chunk of equity. And you did, but don't beat yourself up, because real estate is still appreciating. And even if it doesn't appreciate, let's say you buy a property and I don't know where you are, I would be happy to dive in and talk specifics with you, but let's assume the area that you're in is a $300,000 average price point. And I don't know, but I'm just using this for argument's sake. And let's say you own that property for 10 years and you sell it and it's still worth $300,000. Well, you've had all of the tax benefits, you've had that fixed payment, but guess what? You've got equity because you've paid down principal every month that you make that. And I know it's small in the beginning. It's a small reduction in principal in the beginning, but you have equity because you've paid down principal. And there's never been a decade over decade over decade example that property values didn't increase. And if you missed that episode, go to Mr. Mortgage Radio, scroll back. I think it's about 3 or 4 episodes ago, where we went decade over decade from 1940 to 2020 and showed the jumps in real estate value. So the very first thing I would do is exhale. The second thing I would do is not beat myself up. And the third thing I would do is try to maximize the opportunity based on the budget that I currently have. And Lisa, I'm happy to walk you through all of that. Just give us a call, shoot us a text, shoot me an email. We'll schedule some time off the air, and I'll be happy to answer any of your questions. Thank you for that question. My biggest piece of advice would be shut out the noise, look at your budget, and see what you could do with those numbers. So I hope that helps. But go out there and make it happen. If we can be a part of it, I welcome that. But hey, guys, you hear the music. You know what that means. That is my cue. We will be back in a few. Sit tight. On the other side of this break, we'll be back with more of the Mr. Mortgage Show.
Hey, it's mark-eitel, host of the Mr. Mortgage Show, and I'm going to interrupt this commercial break to ask you for a favor. If you have any friends or family or coworkers who are thinking of buying or selling or refinancing real estate, I'm hoping I can count on you to introduce them to me, to the team, to the show. We'd love to help them any way we can. Just simply share the link, MrMortgageRadio.com, MrMortgageRadio.com. Again, it's mark-eitel, NMLS 1929005. Now, back to the commercials.
Let me tell you a little story about a man named Jed. Well, actually, this is a story about Mary, not Jed. Mary is an awesome single mom who's been raising her daughter in the same one-bedroom apartment for the last 11 years. That's right, one bedroom. They've got bunk beds in there, and they've made the best of it. Her daughter's now a teenager, getting ready to start high school. The bedroom is a challenge, but more importantly, sharing that one bath is getting tough. So she decided to take the plunge and become a homeowner. We got her approved with an FHA loan. That's right, I said it, FHA loan. If your agent's telling you that FHA or VA loans are not being accepted right now, you're talking to the wrong agent. Give me a call and I'll get you in touch with a really great agent. Back to the story. She took the plunge and she is now the proud homeowner. They each have their own bedroom and, more importantly, their own bathroom. Super excited for Mary and her daughter. If you want to learn more, check us out online at MrMortgageRadio.com. That's MrMortgageRadio.com. Or call us at 855-462-7292. My name is mark-eitel, NMLS 1929005.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is mark-eitel, and you are listening to the Mr. Mortgage Show. And friends, you're in the right place if you want the answers, the data, the tips, the tricks, the strategies, all the information that you need so you can make better real estate and mortgage decisions for you and your family. I am joined, as always, by my lovely producer, Jen, who is womanning the Anytime Hotline. She'll get your questions on the air. You can call or text 855-462-7292. That's 855 462-7292. She'll get you on the air. And don't forget, you can shoot us an email too. That's mrmortgageradio.com. Scroll to the bottom of the page, mrmortgageradio.com. There you'll find an email icon. Just click on that and you can shoot us over your questions that way. And guys, check out mrmortgageradio.com. There's a ton of data there, links to everything in the world of Mr. Mortgage. And just so you're aware, after we're done doing the show, Jen will post a recorded version of it up as a podcast. So that will live forever. If you ever want to share the show with any friends, we would be honored. You can do that by simply sharing the link, mrmortgageradio.com. There's also a link to the Facebook page. I always dump a ton of data there. Anything that we reference during the show ends up on that Facebook page. I just find it easier for people to interact that way. And I posted the chart that broke down the CPI numbers earlier this week. And I think the caption says, these numbers are great if you're wearing a dress on your way to buy a used car while you're eating some bacon, because women's dresses, I mean, who knew that was a category? Used cars, bacon, and women's dresses were down. There was a savings in the CPI number. So, hey, you know, that looks kind of comfortable when you ladies wear a dress. And I like bacon. So maybe I'm going to start eating bacon and wearing a dress and really, you know, taking advantage of some of the savings. Anyway, enough of Mark in a dress eating a bacon sandwich. Let me throw it over to Jen for another question. Hey, Jen, what do we have?
Carl sent this text. I listened to your podcast about toilet paper during COVID. It made sense and made me laugh. I don't have a question. I just want you both to know we enjoy your show. Oh my gosh, Carl, thanks for that one.
Yeah, Carl, thanks, brother. I owe you a beer for setting that one up, because I got to share this. So again, I talked about it earlier. I think in pictures. So that's the easiest way for me to grasp a concept. And I don't know if that makes me simple or I was just instructed in life by simple people, but it made it easy for me to understand. So for 2 years, almost 3 years now, I've been hearing people tell me that the housing market is going to crash. And for those of you who don't know, I started in the business in 1999, but I was in the housing market prior to that because I grew up in a family of custom home builders. So there's pictures in my mom's old photo albums way back with me in a diaper holding a hammer trying to wear a hard hat. I grew up in this stuff. So everybody was talking about the market's going to crash, the market's going to crash, the market's going to crash. And I lived through a market crash in the early 2000s, and I talk in length about what makes this market different than that previous cycle. It feels the same. I get it. I totally get it. And I use the analogy that if you take your car to the top of a mountain and you aim it straight down and you turn the motor off and put it in neutral, but you roll the windows down and put on your favorite music, whatever it is, Guns N' Roses, AC, what was the Super Bowl? Rihanna. I don't care what it is. You're flying down the mountain. The motor's not even running. You got, Shine Bright Like a Diamond and My Umbrella and all that stuff just, blaring out of the stereo. The wind's in your hair. It's exhilarating. You're flying down the mountain. You have a sensation. Well, if you go out on the highway and you roll down the windows and you put Rihanna on and you're feeling like a diamond, shining bright like a diamond, and you're flying down the highway, it's the same the feeling's the same, but what's causing it is totally different. And one is far more dangerous than the other. So yes, this cycle for the last 2 or 3 years has felt a lot like 2005, 2006, 2007. But, I go into length the differences. But the pandemic and toilet paper thing, I got a lot of love for that. And I also got a couple of, head scratches. But in the pandemic, there was not enough toilet paper. There was not enough hand sanitizer, paper towels. So we all resorted to whatever we had to do to get it. We paid crazy prices. We were buying it on eBay. I remember the gas station convenience store selling single rolls. It was like the stuff of movies. It was crazy. But my point in that was there was not enough supply to meet the demand, so prices went through the roof and selection was no longer an issue. You were buying whatever you could find. That's what happened in the housing market. There was more demand than supply. And even as more supply came on the market, builders were finishing new homes. People were listing their house and taking advantage of this crazy environment where we're waiving inspections and, giving firstborns just for the opportunity to buy a house. That drove the market through the roof. Supply and demand controlled that. not the cost of money, not a robust economy. Heck, half the economy wasn't even working. They were living on unemployment. So that clearly demonstrated the principle of supply and demand is what drives prices. All of those other ancillary effects control a little bit of demand, a little bit of supply, but the equation that controls the value of something is supply and demand, not the cost of money. So I use that bamboo toilet paper is exactly what I talked about, because I had never even heard of that, but there's tissue paper and paper towels made of bamboo pulp, and it's brown like craft paper, but it was the only thing we could find. So I'm getting passionate about supply and demand, but that was what the reference was. And if you want to hear that, go to the podcast page and scroll back to that supply and demand episode where we talked, I think it's titled Bamboo TP. But check it out. If you can't find it, shoot me a text and I'll send it to you, because as fun as it was to talk about, it was a clear indication of the principle of supply and demand at work in something that we could all grasp at the time because we were all experiencing it. So anyway, I don't want to go down that rabbit trail. I love that stuff, but thank you for that, brother. Jen, do we have another question?
Beth is asking, I have a crazy question. I'm trying to buy a house. We're supposed to close in 2 weeks. The inspection shows the roof is too old to get insurance. The seller can't afford a new roof. He's willing to lower the price so we can have it done, but I can't get insurance. I'm not comfortable paying for a new roof on a house I don't own yet. Is there a loan we can use in this circumstance?
Wow. Okay, Beth, this is a great question. 3 greats, the 3G question of the day. So we're seeing a lot of this in Florida right now. Older roofs, the homeowners insurance companies are not wanting to issue insurance on the roof because there's likely a claim in the future. And there's a whole story behind it. Claims were abused by roofing contractors. I totally get it. But it's happening. It's a result of all of that. It doesn't matter why it's happening. It's happening. So here's an idea, and we've seen it work a few times. I totally get it. Here's the problem. The seller can't pay for the roof, and you can't close, so the seller can't give you money at closing to pay for the roof because you can't close without insurance. You can't get insurance without the roof. You don't want to pay for the roof because you don't own the house yet. I totally understand this. So I'm going to need to have a conversation with you off the air to give you details on how to make this work, but here's the principle. You can, and you're going to have to run this by the underwriter, but we've done it several times in Florida. You can get a builder's risk policy on the property for, let's say, 3 months or 6 months, whatever it takes to get a roofing contractor out there and get a roof on the property. And where you are in the world is going to dictate that timeline. The builder's risk policy protects against claims while it's being repaired. And then the homeowner's insurance can be issued and bound, but it's going to live behind the builder's risk policy. Now, I'm not an insurance guy. I'm not an attorney. I'm not a building official, but I've seen this work. So I'm excited to share this with you. I'm happy to give you names and numbers of people who might be able to help. But the builder's risk policy protects everybody until the roof is replaced, and then your homeowner's policy takes over from there. So there is a way to do it. It's going to require 2 insurance policies. The seller can pay for that insurance policy at closing. So if he's willing to pay for the roof, he may be willing to pay for that policy. So I hope that helps, but it sounds to me like you're going to need a layered policy strategy with a builder's risk policy in front of your homeowner's insurance, and then that will give you the time that you need to get the roof on the property. Here's the caveat. You got to get the roof on the property or all the policies are going to cancel, and then your mortgage company is going to force place the insurance, and you're not going to want to see that bill. So we've closed loans with that strategy, and I've seen it work. So hopefully that helps. But man, oh man, you hear the music? You know what that means? My gosh, where has the time gone? We've wrapped up another episode of the Mr. Mortgage Show. Thank you so much for spending a little bit of your time with us. Super excited to be with you as always. I see Jen's on the phone. I was going to throw it over to her, but I'm going to say goodbye for Jen. So guys, if you need us, you can reach us during the week, 855-462-7292, or as always, MrMortgageRadio.com. That's MrMortgageRadio.com. We will be back next week, same time, same station. See you then.
That's a wrap. Join mark-eitel next week for more thrilling, edge-of-your-seat discussions about real estate and mortgages right here on The Mr. Mortgage Show.